In this episode, I'm going to discuss financial planner averages in the United States, some of the different areas or different parts of financial planning business. And I think it's especially important if you're looking at selling your business or acquiring another business or just evaluating your practice and how it works. We are virtual help for RIAs. We are a virtual assistant service that only works with financial advisors. We help with all aspects of the financial planning world, supporting that world, interacting with clients, marketing, meeting prep, meeting follow-up, forms, dealing with Schwab or TD Ameritrade or Vanguard, using software like Money Guide Pro or eMoney, just helping with support so that you have more time to spend with your clients or grow your business. All right, our topic is valuation, or how do you put a price on a business? What are the factors? What are the averages? What are you being compared against? So average client tenure for a business in the market, the average is about 12 years. So just to consider, of course, you have more value if you've had the client longer. They're more connected to your company, more sticky, more likely to stay around. If they've only been there for a year, if you leave, they might not stay around as likely, might not be as likely to stay around. Average practice tenure, years in the industry, 28. Years independent, 21. Okay, that's the experience of financial advisors right now. Post-closing assistants. So let's look at fee-only advisors. Generally, people give about, and let's look at 2018, about 700 hours of assistance after selling a practice. So if there's 2,000 hours in a year of work time, about a third of a year, 4 months, they generally stick around 4 months for the transition, moving the clients to the new advisor. Other continuity factors, your broker dealer, custodian, those could be factors for the company buying your firm, or if you're buying a firm, that's a factor. Company name, it's a negative to use the owner's name. A more generic name would be easier to pass along and keep that continuity, the marketing, the SEO, those pieces. Non-competition, non-solicitation agreements. I think that's pretty standard with buying and selling practices, that you're not going to immediately compete. And so that is part of the deal. But the extent, the number of years, the geographic range that you agree not to compete in would improve the sale or saleability. Technology level. So if you're doing everything on Excel, it's a little trickier for a new business to incorporate your book or your practice. If you have a CRM, Redtail, or Wealthbox or something that can easily be migrated to the next advisor, of course, that's preferred. Any regulatory civil actions would be a negative because that'll carry along. Cash flow quality. So the benchmark, revenue concentration, generally top 10% of the clients make up 40% of the business. That's the benchmark. So if this is much greater than that, that would be a negative. If there's 3 clients driving your income, that makes it a little riskier. Client ages, yeah, here we have. Concentration of ages, 30 to 50 years old, there's generally not as many clients that are on the younger end. I see so much movement towards XP planners or millennials, and but right now they don't make up a large majority of clients. 50 to 70-year-olds, the majority. Over 70, this is the benchmark. So if your practice is heavy and above 70, when you're selling the business, of course, it's a factor to consider, because how long is that going to generate revenue? It'll probably be more limited. Revenue per client, the average is $7,000 per client. So the lower that is, I mean, I guess the higher that is, the better. For the same amount of service, that would be a more efficient business. But there's a benchmark. I guess that's something to gauge against. $7,000 per client in revenue. That's even something to think about when you're just thinking about how your business is structured. If you're doing AUM or you're doing just flat fees or it's hourly, what is the average? 7,000. I mean, can you find clients willing to pay that? I mean, that's the average, not just your high net worth view. Average client affluence. The average client has 1.1 million. So if your average client is around 500,000, 300,000, those are easier to find. There's more of them. You're probably billing less, and it's not as attractive of a business. Historic revenue, sure, you want positive growth, and that's actually something you're selling. Is your marketing, is your client flow, how is that new client and revenue coming in? Is that something you're selling, or are you just selling this book of limited number of clients and not really the potential growth or new clients that could come in? New clients versus revenue growth. So revenue growth could be pulling new accounts from existing clients, could be just the market's higher, or you increase fees. Other revenue factors, good or bad, a niche, if you're working in a specific market, you just want to be aware of that and see if you're acquiring a business that would fit, that's something you could continue to pursue, or if you're selling yourself, that could be a nice complement to an existing business if you have a target area. Like eye doctors, what have I heard? Some strange, not strange, but us impact investing, eye doctors, military, divorced couples. Someone was doing entrepreneurs, but they were owners of, I guess, from Kitsis. He reviews a lot of businesses. You can hear lots of different target audiences. The referrals, if there's referral fees or referral channels, it's just a factor. The expenses, that's an issue. If you're buying a practice or if your practice has a high expense, I think we have a slide on what average is. Here you go, average annual expenses. So annual expenses about 33%. So a third general, this is the benchmark, a third of your income is going to go towards expenses. I kind of heard the breakdown, a third toward expensive, a third towards salaries, and a third towards profit. Market demand, that's a big one. The darker yellow are higher demand. The darker blue are not as popular, which is interesting. I guess I could see that. New York, California, Texas, Florida, big growing areas, you'd expect higher demand. So it's a more valuable practice than if you have some Nebraska or Nevada. I'm kind of surprised Nevada. But Nevada practice would be less attractive. So geographic makes sense. Financial advisor income. I guess this would be for employees and for bringing on partners. We start with supporting advisors, and you can see it sort of runs around the 50 to 100,000 and flattens off. Really, if they are not becoming partners or moving on, they are losing some of their value, it looks like, with more years. What I've heard is after 5 to 7 years, if they are not offered some kind of ownership share, there's a big risk that they could either spin off and start their own or just leave and try to look for another practice where they could become a partner or have assets, have ownership. Yeah, the 5 to 7 year window. Servicing advisors, so advisors who are meeting with clients, not a big difference. It doesn't really go above 100,000, right around that. Lead advisor, we are getting up 150, 170,000. And then a practicing partner, there's definitely a lot more room for growth there, a bigger range. Yeah, just crazy incomes. That's great. How hours are spent by financial advisors? About 9%, so 9 hours a week, a little over a day, on business development, all the marketing pieces. Investment management, administrative tasks, 4 hours. Professional development, 3 hours. Direct client activity, almost 27 hours during a 40-hour week. So more than half with direct client activity. I could see that. Answering emails, answering the phone, meetings, in meetings. It can't be all in meetings. Direct meetings, face-to-face with clients is about 9 hours. So of a week, of a 40-hour week, about 1 day is met face-to-face with clients. And then you have prep, planning, servicing their tasks. So this is an area where virtual help can help in a lot of these areas. We actually do sit in on meetings with clients virtually, but it helps us to do the follow-up. We can even take notes during the meeting, but we can help know what's going on so we don't have to spend additional time for you to fill us in on everything that needs to be done. So we can even sit in on meetings, and that helps. Meeting preparation we could definitely do, whether it's spreadsheets to populate them, get information if there's new information to get e-money up to date, or Money Guide Pro, or some tax planning software to get ready for your meetings, depending on what the topic is. If it's tax planning, if it's just an investment rebalance with what a rebalancer, TRX, or some rebalancer. If it's Morningstar, if there's certain reports you like to have ready, we can do a lot of that prep and be ready for a meeting. The client servicing tasks, usually we can handle generating forms, creating accounts, transferring assets, following those assets over, following up with clients through email or calls to make sure all the steps are done so that assets are being transferred over, and whatever the holdup is, we can take care of getting that resolved. Business development, we do a lot of that. We edit podcasts, we edit videos, do a lot of that work. I guess the point of this presentation isn't to talk about our services, so I'll leave it there. But this is kind of interesting just to gauge how your week goes versus what the industry average is, and just compare where you're spending a lot more time, a lot less time. And again, the goal would be spending time in front of clients and some of the marketing that you need to do, not necessarily doing all of it, but that you need to do. All right, if you need any support from us, we're here, virtualhelp.ria.com. We would love to help support you so you can spend more time with clients, growing your business, or just out of the office. Yeah, Virtual Help RIA, I think, is most of the social media sites. Let us know if we can help. Glad to set up a free upfront meeting to discuss your practice, how we could help, our services, how we work. Thanks for listening. I hope this was helpful. I didn't mean to focus so much on our services. I think it's interesting to just take stock of where your company is versus what are your long-term goals. Bringing someone on, internal sale, external sale, and just where it would be helpful to focus your business so that it's worth as much as it can be. All right, thanks a lot. Hey, if you like these videos, please subscribe, give a review, give a rating, make it so other people can find us. We'd appreciate it. Thank you. Take care. Stay safe.